Good day, everyone. Let's hear from BG Trading. Hope you are well. Today is February 6, 2023, and I'll be analyzing ZIP, which the SX code is ZIP. This is the stock that we have been trading over and over again, together with some of our VP members, and we had closed the position a couple of weeks ago, and I want to chat whether ZIP is now in a buying area, whether we should sell, and what exactly is happening with ZIP, provided that we had just an update in the market from the company regarding 2023 financial year second quarter. So let's have a look. I just want to remind, this isn't a financial advice, just as from BG Trading, sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up the targets in which we are using to sell, how we avoid FOMO, which is one of the biggest mistakes in trading, and much more. So if you like, please share this video, subscribe the channel, and let's kick off with ZIP. Now, we had recently received a update in the market for the second quarter of 2023 financial year. That's exactly what I want to go through quickly with you and see what happened with ZIP. Is that still really becoming a sustainable business? It's actually achieving what has been promised with shareholders in terms of sustainable growth. So that's what we're going to look into it. Now, obviously, I'm not going to go in detail what ZIP is about, because a lot of you guys must know what this already if you've been following us. But I wanted to talk about in this video is about the highlights that we have seen in the latest update. So in January 24th, ZIP announced the FY23 Q2 results, with cash transaction margin improving from 2.1 in Q1 to 2.6 in Q3. Still very low compared to other businesses, but there was an improvement out there, which is great. Also, a record group quarterly revenue by 12% year on year. So the revenue for the group increased year on year to $188 million. Also, I want to highlight that ZIP in US delivered positive EBITDA in November and December, with a very strong seasonal performance on its track to exit FY23 cash positive EBITDA, which is exactly what investor wants to see. ZIP in US saw a credit loss rate improved substantially to 1.1%. So, which is really good, because in quarter before, previous quarter, there was 2.4%, down to 1.1. So here it is for you guys, which is positive, is exactly what investors wanted to look at. In Australia, credit loss continued to improve as well, with an ongoing focus on proactively managing risk settings. So, and that's to do with the regulation as well. So ZIP, in fact, is positioning itself as a company that is actually happy to have its regulation on the industry, and that's because they believe that if they have actually a procedure to assess potential clients and retail consumers in a better way than a lot of the buy now pay later companies doing, it's not only bringing responsibility to the market, but also will help to improve the potential potential credit losses in regards to consumer not paying back its repayments. Now, ZIP in Australia and New Zealand delivered strong revenue as well, 17% year on year. ZIP in New Zealand itself delivered a positive cash EBITDA in November and December. and a record transaction volume in December, which is really positive. Now, a little bit, one little red flag here is that U.S. operation has seen slightly decrease on the revenue, which, look, 2% year on year is not a lot, but it's something that we need to be looking at in the next few quarters and then next financial year, whether Zip will actually increase revenue or decrease revenue. We want to obviously see Zip increasing revenue. Remember, the management has slowed down its growth pace and therefore obviously going to have a reduction on revenue growth, but we don't want that to be negative in any markets. So this is a red flag there. Also, obviously growing slow, as I just said, but nevertheless, it brings more balance and sustainability to its company, which is exactly what we wanted to see. Now let's jump straight into the side. Look, there's a lot of other things here. I'm going to be putting the link at the description, in our free Facebook community. So just make sure you become a member of a buy, growth, and sell strategy for share traders if you want to have access to this full analysis. And obviously for VIP members, if you log in, you have also access to entry targets and much more. Our entry prices and our targets for Zip over the course of the next trade. So let's take a look what's happening with the Zip now. Stock price trading at 67 cents. Well, what I wanted to just to share, every time we looking at, we got to make sure we have all our indicators on the screen. So we have a Heikenach, we have moving averages, the simple moving average, the exponential moving averages. If you haven't done our course yet, so I really recommend you to take our course and understand what terminology we're talking about here. Okay, so all the indicators on the chart. And what I wanted to show you is the incredible trading behavior for Zip. As you can see here, since like 2020, we saw here 700% upside on this share price swing, then 44% upside, followed by a 76% upside. Then we had a 42% upside. And then we had 170% upside and a few other upsides here. But then the stock starts sort of falling down. And that's to do with the fact that a lot of investors lost confidence in the management of Zip and most of the buy now, pay later. A lot of people were even thinking that Zip would go under, which didn't happen. Okay. But anyway, there was a growth in tech sell-off in the US as a result of high interest rates, successive hikes of interest rates, which is obviously no good for these type of stocks. And then the share price finally stabilized. And then we saw a rally of 290%, 295% in August and July 2022, followed by a little rally of 44% and 83% just a couple of weeks ago. Obviously, we have been trading this particular stock many times, being incredibly profitable. And even if you go to our free Facebook community, we see that we locked 35% out of the last trade. And then we've done, this is the beginning of this year has been incredible for us anyway, because we've done a Zip, Sezzle, Megaport, SAYONA Mining, Pilbara Minerals. So they're all between 20 to 40%, which is what we do here with BGS 20 strategy. And obviously, there's a lot of other stocks that we currently holding, and we are seeking to exit at the targets together with some VIP members. So obviously, if you're interested to know what stocks we're trading, DM the team When I say DM, I mean direct message the team or go to our website, bgtrading.com.au, have access to all the information, how to become a VIP member. Now back to a zip chart formation. What I wanted to show you here is that if I ever want to buy zip or holding zip for any means, it's gotta be when it's trading at technically discounted price for the long term or technically fair price for the short term. I never really want to buy at the FOMO area. And doing our online course, you understand what FOMO area means, how we detect FOMO areas. But I'm going to quickly show you that what we don't want to buy is when the stocks trading, those candles are trading more than 10% above the red line. If it's trading above the red line and it is more than 10%, means it's becoming danger. It's in a FOMO area and we want to avoid. This is the most common mistakes. See here on a past behavior, every time you will be buying the stock with a great distance between the candle itself and the red line, you would more likely to undertake a big correction, and then we be seeing your positions 20, 30, or even 40% negative, which is very annoying, and nobody wants to have that on a portfolio. Okay, so having anything between a 0 to 10% negative in trades, sometimes that's fine, no problem with that. But if you start increasing from 10%, really got to start thinking about that. First of all, we probably bought the stock at the higher than ideally you wanted to do, and then we start thinking about stop loss on losing positions, and then if you have same on positive, maybe even increment some positions. So averaging up and never average it down. It's very dangerous to average it down unless you're really certain that the fundamentals of the company will be positive. Now, in this case, I'm very comfortable on holding ZIP at the current levels. What I don't want to hold ZIP if it reaches this pink line here, and then that's probably would be taking profits. That's what I'm going to would be doing, taking profits. So very likely, again, I did a video before. Then ZIP is one of the stocks that we are expecting to double. Although we sold that 35% at 30% profits, we sold ZIP, but then we're looking to re-enter again for a cheaper price. We are able to actually buy more units for a lower price and locking profit by locking profits at a higher price. That's how trade works. You don't just make money out of the trading, but also make money by selling the stock high and buying more units, or buying the same amount of units and separating some of the cash that you made and putting back into your account or something, or use for something. Okay, so ZIP for us at the moment is trading in buying area. We pretty happy of holding ZIP, and I think obviously if I ever want to be holding ZIP would be at the current levels, not when it's had rallied already. Okay, good prospect for ZIP. I'm expecting ZIP to reach $1 or above some stage this year. So even doubling from this sort of 65, 68 cents mark. But I'm not sure whether ZIP will sustain its share price on that sort of level. I reckon we're going to see another spikes during the year as past chart formation suggests, and that ZIP will keep its trading behavior swinging up and down quite drastically. Okay, that's our analysis for ZIP. Hope you enjoyed. Let us know what you think, and if you have any suggestion for us to look into another stock, please do not hesitate to put a comments at the description below. I'll see you in the next video. Have a fantastic week. The whole idea when we designed BG Trading BGS 20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.